studio with Remax Hallmark. Today we're together with Alan Lavoie, our trusted mortgage broker at Remax Hallmark. We're discussing a bit some of the issues that are taking place and that have our clients a bit interested in learning a bit more, and the continuous increase that have taken place for the interest rates. Mm-hmm. And today we just want to get a professional advice of what are the reasons that are causing these increases. What are the aspects that you should have in mind when you're thinking about getting a mortgage, and what would be the best approach to deal with these changes? So, Alan, could you give us your opinion?
Well, recently Bank of Canada came in and they mentioned that they're going to slow down on the tightening of the guidelines, which is definitely beneficial for us as consumers in the Canadian marketplace over the next couple of years. That being said, are rates likely going to go up? Yeah, probably. But there's other options other than just fixed rates. We can look at variable rates, which are very attractive right now. They're almost 0.5% lower than you would see on the fixed side.
But how would clients feel about not having the certainty that a fixed term would give you, having...
Understood. Well, there's the option with the variable is one of the features on the mortgage is you can lock into something fixed should you feel that rates are coming up and you start getting a little bit uncomfortable. So a good strategy I like to adapt with my clients is take today's low rate, and if you see that rates slowly start coming up over the next couple of years, you have the option of locking into something fixed, short term, 2-3 years. So essentially you're getting the benefit of today's low rates with the flexibility of locking in should rates come up over the course of the next 2 or 3 years, which they're forecasting.
I think our clients would have a question: what penalties or what type of negative impact would it be from switching from the variable into the fixed?
Yeah, and first-time home buyers, I can tell you this, that 78% of first-time home buyers take the 5-year fixed, and we're looking at the average length of a first-time home buyer is 3.8 years in the property. Okay. So that being said, you're seeing a lot of penalties with clients that are taking the 5-year rate, and lenders now are charging IRD, which is interest rate differential. So if you're getting out of your mortgage in year 4 or 5, you're looking at substantial penalties of $10,000, $12,000, $15,000. So my suggestion is probably to go with something a little bit shorter term, or something with the variable, which is today's great low rate.
And it's a good insight as well, because we were discussing previously that you've had clients that were going into variable and they were able to secure lower interest rates. And
or for example, I had a client in 2008 that took, or 2010 took a 3-year in the mid 2s when rates were at 3.5 on the 5-year product. And today she's renewing at 2.69. So if you were to average it out, you're looking at 2.74 on the fixed product. And no penalties, right? Because she was a first-time home buyer, so she wasn't sure if she was going to stay there long term, which is why we suggested the 3-year. But lots of options out there, and the more that you educate yourself, the more that you have control over what you're doing on the financial side, for sure.
Okay. Yeah. So, thanks, Alan. We appreciate your opinion.
You're welcome.
And basically, there you have it, folks. Basically the advice that we would give you at these changing times and with the interest rates. So keep on following us. We will try to provide you more content that is relevant to you guys in your planning and your decision making. Take care. Have a great day. We're meeting with Alan Lavoie from mortgage broker, right?
Yeah.
Look, it's mortgage specialist.
That's not going to help me. She's giggling the whole time.
I would not giggle.